the best price levels right now and what to do with them. So welcome back, and I thought I'd do another video. Today we're talking and taking a look at current price charts, and I marked the 11 most interesting high impact price levels. We're looking at supply and demand, support and resistance, and other areas, and I explained to you how to approach your charts by using key levels. And it's very, very important that when you do your price analysis that you always start with identifying key impact areas, because that makes trading much easier. So we are starting here with the US dollar index, and this is the 12-hour chart, and you can see the market. Last week it dipped into this supply or demand zone, and a supply zone, if you have done my courses or if you have watched any of my previous webinars, you will know that the supply and demand zone often forms not right at the bottom of a new trend, or not at the origin of a new trend, but a little bit higher. This is a very, very common behavior, that you have your initial reversal, then you have a temporary pause, and then you have your real trend coming up afterwards. And this first consolidation before the origin of the big trend, that is usually where your supply and demand area sits. And you can see the market just briefly dipped in last week here, and we're seeing a small a small bullish push right now. And this will be interesting for many different US dollar pairs across the board. So whenever you see that the market is dipping into such a high impact supply and demand area, that's when you should start noticing it. We have the US dollar Norwegian Kroner that is also dipping into a very important price level. This is the real origin of this huge trend that was started in early March. And you can see we had a small consolidation and then the violent breakout. This marks the origin of this huge bullish trend. And you can see the market dipped into it last week. This is the daily chart. And so far today, the price has been hovering here. A lot also will depend on what we have seen in the previous example, the US dollar index. Will we find more bullishness? Then there's a good chance that we will also, or we may also see some bullishness here. However, you can see the last probably 10 candles were very bearish. So if this level breaks, there's a good chance that the market will retest even lower lows here. We have the New Zealand, Singapore, and a few New Zealand pairs and Kiwi pairs are currently reaching important key resistance areas. You can see this resistance area was formed in very early 2020, so roughly 5 months back. And the market just arrived at this last week. And I'm watching this very closely to see, will the market actually fall lower from this one? So we are maybe looking for potential selling opportunities, or are we going to get a break and retest and maybe are able to target the higher highs? So those key turning points, they are always very important to mark on your charts. We have gold. Gold is or has been trading in a very well-defined range since April. You can see here we are trading below or between 1680 and on the top side 1780. And many traders are going to observe what is happening here. A break below this level may open up further the downside until we have here a gap that has only partially been closed. So that may be an option. Or on the upside, if this level holds, the market will probably bounce back within the range. So gold is trading currently at a very important key area. We have the S&P 500, and this current bullishness still looks like it's unbroken, and above the current price you can see there are two key areas. The first one is the gap that has formed in late February, and this gap hasn't been closed, and very often, not always, but very often, those gaps, they pull the price in like a magnet. So when the price comes close to those areas, there's a high chance that the price will actually make the final run and close the gap. And just a little bit above the gap at 3400, that is where we have the all-time high for the S&P. Whereas the Nasdaq already did make the all-time high last week, the S&P and other indices are on their way. But you can see also right now, the market is trading into this previous support, could turn into resistance, but you can see right now it still looks quite bullish. But don't neglect the chance of a retracement. The longer the market goes into one direction, the higher the chance and the likelihood for a potential pullback. And if you want to know more about how I trade, how Moritz trades, we have compiled 8 trading courses that we did, and we put them into one package. So whereas previously we sold them individually, now you have your all-in-one package. It's the ultimate Forex university. You learn everything that you need to know. Make sure to check the link in the description below for that. The Euro US dollar is also arriving at a previous demand zone. And it is currently picking up more selling momentum after it completed its Fibonacci sequence. So when we measured the Fibonacci sequence from the origin of this uptrend, we have here the first end of the first trend wave. We have the pullback here at the 38, and then it completed even the 261 Fibonacci extension. This often is a good time for people who are long to take profits, and other people may start looking for shorts. So this is a very, very interesting combination that we have a previous supply area that originated and started this huge downtrend, and we have a 261 Fib extension completed. Together with the US dollar that we looked at in the beginning of the video, this may be something to really keep an eye on. The British pound New Zealand is trading at key support levels, although you can see currently the price action still looks quite bearish. So we had a very, very strong bearish run here last week, triggered by this engulfing candle, very strong bullish bearish push, and then afterwards we have seen a very good bearish continuation. I'm watching very carefully what is happening at the previous low, and below that we have this resistance area that turns into support. So the market is facing a lot of strong support here. A break below that could open up a lot more room to the downside, and on the other side, if the support level holds, we might be able to trade this to the upside. Let's see. The Euro Yen at a very, very important area that I am watching very closely, especially with this recent candle development. You can see this is the daily. So over the last probably around 10 candles, we had a very, very bullish sequence. And this is where the market arrived last week with a very strong bullish candle. Previous support area became resistance on the breakout, and now it could look like it's again acting as resistance. You can see also this candle sequence. Strong bullish candle, a pin bar doji, and then today this candle is still forming. It's only halfway done, so a lot more time has to pass before this is actually closed. But if we get a bearish close, this bullish run seems to be over, and more people are probably interested in trading the short side. We have the Euro Aussie, which I've been mentioning a few times already, very similar to what we've seen on the US dollar Norwegian Kroner. The price dipped into the previous demand area, which is the origin of this huge, huge uptrend. And it's always important to mark those areas on your charts. They can be very, very helpful price levels on your charts. Currently, the market seems quite bearish, so there's a good likelihood that this level will not hold, but we'll see. And this is definitely a level that you should have on your radar. We have the Canadian Swiss, which is trading or about to trade into big resistance levels. First of all, the blue level shows here previous support. It may turn into resistance. This is often how support and resistance works. And another confluence factor is that here the trend line intersects with the previous support area. So you can see when we connect the previous highs during this recent downtrend, then this is where the highs meet the trend line, or the trend line meets the support level. So a little bit more room to the upside. The market is still making higher highs and higher lows. But if the market reaches this area, this is where a lot of people will have their positions or their trades waiting, and also many people are going to wait for entering new trades here. We have the Aussie Yen, which is absolutely very, very interesting and a must-have on your watch list. Here is a big area of previous resistance that has held and acted as resistance many, many times. The market did arrive at it here last week. Currently, there is a bank holiday in Australia today, so probably less trading activity. Also, the Asian session is already over, so not more action here probably, or not. You can't expect a lot more action today, but this is going to be something that many people watch together with the Euro Yen. This is really where people have their eye on. So the bullish people also, or the bullish traders, probably use that as a way to enter or to exit their trades, use that as their take profit target. It doesn't make sense to have your target here if you have enjoyed the rally here. And other traders will be waiting for finding new trends or trades either if the price level holds and we sell off from it, or maybe on a break and retest. That will be very, very interesting to follow going forward. And that's it for the 11 biggest Forex and commodity levels. We also took a look at the S&P. I hope there's something that you can take away from. When it comes to preparing your own charts, I always recommend to start with looking for high impact levels on the higher time frames, and then you can scale down or move lower to the lower time frames to fine tune your entries depending on your way of trading. Let me know in the comments if you enjoy this video and if you want me to do more of those regularly with current updates from the markets.